Welcome to Future Focus, a video series brought to you by ICICI Lombard. Today we have with us Gopal Balachandran, the CFO and CRO of ICICI Lombard. As you all know, ICICI Lombard is a leading non-life insurance company. Today we are here to talk about risk management in these unprecedented times. Gopal is going to share with us insights from ICICI Lombard and also insights for you as an audience. Welcome to the show, sir. How are you?
I'm good, Vishal. Thank you so much, and good morning, everyone. It's always a great feeling to be here, and happy to kind of share elements of risk management that we fundamentally have implemented. Our business is fundamentally risk management. I think let me put it in that context. And as Vishal rightly described, we'll be extremely happy to kind of share our thoughts. We are also gaining experiences as we speak, but extremely happy and delighted to kind of speak on the areas which we think will be relevant and useful to all of you.
Sir, before we get on to the subject, you joined ICICI Lombard in 2002 when it was a very young company. You had just finished your CA and your company secretary, and you had come in at a time when a crisis had just ended, right? The dot-com crisis. And here we are in the midst of another crisis. Risk management is back to the center of everything. How do you manage to understand these changing trends? I wanted to talk to you about a couple of things based on your experience before we go on to the main question.
No, absolutely. I think that's a good question to start off with, Vishal. I think which is what I said, I think if you look at it from an ICICI Lombard standpoint, fundamentally we take the risk of companies, and we kind of get the companies away from their risks that they are exposed to, and we kind of indemnify in case if any losses are being experienced by them as a result of some of these crisis events. We make good those losses. I mean, that's how the journey starts for us. So in that sense, as an organization, as a company, we are into risk management all the times. And as it is rightly said, the thing starts from within. I mean, you have to kind of, while you are advocating a lot of risk management practices for companies, but more importantly, you need to see as to how you have instituted a risk management capability within the organization, which will fundamentally stand the test for meeting any risks that the company would be exposed in the first place. And our journey to risk management, in fact, to be honest, started almost like about 15 years back. We didn't start off with an enterprise risk management framework in the time when we started operations, because we also wanted to gain ground in terms of our experiences. And we kind of thought about it somewhere around 2006, 2007 to kind of start looking at putting in some kind of a framework within which we will be able to work as an organization. And we have been kind of learning ground over the years. And honestly, it was in 2009, 2010 is when we really thought about putting a formal ERM framework which will kind of fit the organization at large. That's how the whole journey started. And from there on, and as I said, every experience is a learning experiences. More importantly, when you come across crises, they kind of teach a lot, because it's a testimony of what kind of practices you have put into. And even this crisis, as we speak, obviously of an unprecedented scale, again, it teaches a lot in terms of how companies have to function when you look at it from an ERM perspective.
Great point, sir. You also wrote a recent blog, which talked about risk management. In that you outline a few important points on the roles and responsibilities. Can you share some roles and responsibilities of yourself that you're handling the situation in such an unprecedented time, please?
No, absolutely, Vishal. Again, that's a great question to ask. So again, as I said, I think being a responsible company, I think we are driven by our core fundamentals of corporate governance and risk management. And as I said, in these times, we continue to remain committed fully so far as meeting the service requirements of our customers are concerned. Now, when you look at it from the standpoint of a responsibility or a challenge in these times, one of the core things that stands the test is what is it that you stand for as an organization. I mean, that's the pillar in which the foundation of the organization is laid out. And if you look at one of the things that ICICI Lombard has advocated at all times is profitable growth. I think that's a theme that we have kind of driven the organization with, and that along with ensuring protection to our balance sheet at all times, have been at the core of the forefront within which we drive all our responsibilities and the challenges that we have insofar as meeting the requirements of the customers are concerned. The couple of responsibilities that comes immediate when you look at this scenario, one is around I'll kind of talk about three aspects. The first and the foremost aspect is employee safety, because that's the first responsibility that comes when you look at any organization that is in the service industry. Employees comes first, and so therefore you have to ensure the safety and the well-being of the people. So that's one of the four core fundamentals that I would kind of lay emphasis on when it comes to responsibility in such situations. The second is business continuity, because end of the day, as we say, employees can come, employees may leave, but the organization has to kind of survive for the next X number of years. So hence, to that extent, while events of a pandemic nature or otherwise may happen, institutions have to kind of completely reorient their business models and look at ways of sustaining operations insofar as instituting appropriate business continuity practices. So that's the second area where I would kind of lay an important responsibility on. And the third aspect, which is more with respect to our own internal risk assessment. Because when I said as an organization, you have built an ERM framework in place, you need to make sure that you do a comprehensive risk assessment of your internal processes and see where do you stand in these uncertain times. Now, let me quickly touch upon some of the initiatives or let's say aspects that we have taken into factor when we look at it from an employee safety standpoint. The first and the foremost, pretty much sure, I'm sure you have heard a lot. We also kind of did in all our office premises temperature checking for our people, and if at all any of our employees showed any symptoms of this particular virus being contracted, because you need to kind of make sure that those set of people for whatever reasons need to be treated differently so that the rest of the organization is able to function as business as usual. The second thing that we did was, obviously in these times, a lot of us, particularly we are in the business of service, we tend to do a lot of physical trainings and conferences for most of our employees as well as for our service providers. So in these times, we again said, let's keep that on hold. And we can always, as we are doing this digitally, I think the thought process is try and see if you can kind of do a lot of those in the digital format. The third aspect, I think what we did was completely put in that sense a full stop to all kind of travels, whether it is domestic or international, because again we didn't want the employees' well-being to be compromised. And the final piece, it's always important not just to have a committee at the top. While you can have a tone from the top in managing things, but the eyes and the ears of the organization is always have to be on the ground. So we kind of adopted a two-layered approach when it came to SPOCs. So while at the management end we had the Mancom, but at the operating level we had those point of contacts who also acted as the eyes and ears for the organization. So those were some of the measures that we took insofar as employee safety is concerned. Quickly on the internal risk assessment, which was the second pillar that I kind of spoke about. As an organization, we have an ERM framework in place. The ERM framework broadly kind of works around 5 key risk categories. One is credit risk, market, underwriting, operational, and strategic. Now, each of these risk areas kind of has an impact or has a responsibility in the way of how you manage it. Let me just quickly take you through each of them. If you take credit risk, we are exposed to credit risks on working with our reinsurance partners. Just like we take a risk from customers, we also do a risk transfer to reinsurance partners. We have to ensure that we do a comprehensive risk assessment of those reinsurance partners so that any possibility of recoverability from those reinsurers are being looked at very closely. So that's a credit risk monitoring that we do. On the market risk side, if you look at an insurance company's operations, we do write, or let's say we underwrite risk of customers, but we also manage the funds of people because we invest that in various securities, and in the process we are exposed to market risk. So again, there becomes a responsibility for us to very closely monitor the assets in which you have kind of invested so that you don't run any kind of risk in terms of recoverability of those investments. And at the same time, there is equally a responsibility to ensure that you have adequate liquidity, because only when you have liquidity in the portfolio is when you are able to manage most of the things. So hence market risk becomes equally an important priority. On the underwriting risk, that forms the core of our business. And in these times, there is a responsibility for us to still continue exhibiting underwriting service. The question is, how do you get that done? So there again, I think thankfully, the level of investments that we have done on the digital capability, we have been able to do a lot of virtual risk inspections. Even in these times, we have been able to carry out a lot of, let's say, virtual claim surveys, and in the process you are able to, as I said, run the business as a business as usual scenario. So again, underwriting risk assessment becomes of paramount importance. Operational risk is equally important in these times because couple of reasons. One, your system risk becomes of at a heightened levels because all of us are now getting used to, let's say, a work from home environment, and this by itself poses a lot of challenges. And you need to make sure that your system related information security aspects are completely assessed, and all kind of endpoint securities what you are required to institute, they are all up and running so that employees are able to still function as effectively as they could. And in the process, still there is no compromise of customer data, or for the matter of fact, even there is no leakage of data that the organization gets exposed to. So hence operational risk is of paramount importance. So there comes a responsibility to manage that aspect. And finally, on the strategic risk side, reputation risk is of great significance because an organization fundamentally stands for the brand that it is associated with. And unless and until you don't manage the brand effectively, you can significantly be put to test. So there again, I think we tend to look at, I mean, these days there are a lot of avenues available by which you can do those social media tracking. We also pretty much end up doing a lot of those, so that at the end of the day, we just want to make sure that from a reputation standpoint, we don't lose our brand's credibility. So those are all aspects that I would say insofar as the responsibilities in these times are concerned. And you asked one more important element, Vishal, which was on insofar as challenges are concerned. Now, if you look at challenges, let me look at the various stakeholders that we render service to. It's customers first, right? So in these times, on the one side, while there's a challenge in the way you operate, but equally there is a need for you to exhibit service to the customers. So that's by itself is an inherent challenge, and you need to kind of capacitize the institution by which you are able to meet the requirement of the customers. So that's one of the challenges that you're kind of exposed with. As an insurance company, we tend to work with distributors because when you call up distributors, it's agents, it's my bank partners, it's, let's say, my dealer partners. So there are various distributors that you kind of work with. And again, in these times, it's important for us to handhold them to make sure that they are able to adopt digital technology, because as I said, you need to continue business to the extent it can be as usual. And to that extent, there's a challenge for us to ensure that there is acceptance of the way we have created the organization. We also want the intermediation to be capacitated as well. So you need to have a challenge to meeting the requirement of the distributor. There is the regulatory angle, because in these times, the regulator comes out with a lot of, let's say, regulatory guidelines, keeping in mind the policyholder interest. So, and there is a lot of compliance requirements that they have eased. But at the same time, you have to make sure that as an organization, you stand to the requirement of the regulatory norms that are being laid down. So again, there's a challenge to meet the various regulatory guidelines that will get laid out. And the final piece is there is equally a challenge that you have with respect to our shareholders as well, because equally shareholders, while they understand the situation, but at the same time, they would logically expect reasonable growth in profits insofar as the organization is concerned. So that in a nutshell is what I would say are the various nuances of responsibilities and the challenges that we are exposed to as a company.
Very good answer, sir. I mean, in a sense, I want to straight away move into balance sheet protection because all those responsibilities that you mentioned protect your balance sheet and focus on how to fight the volatility, right? There is increased volatility going forward. So would you recommend that protecting the balance sheet is the single most important factor at this point of time and focus on growth at all costs? And where do you see growth coming from?
I think in these times, even customers tend to value a lot of companies which are on a very strong, solid footing. And that would be evident by the balance sheet strength that you have. At the same time, they would value you for the extent of capital adequacy or solvency that you are able to exhibit relative to the minimum norms that are prescribed by the regulator. And at the same time, they would equally look for the level of corporate governance that you're able to exhibit as an organization. And since you specifically touched upon the aspect of balance sheet protection, as I said, one of the core risks that we write as a company is my underwriting risk. And when I'm underwriting risk, particularly let's say for large factories, there is a need for us to undertake physical risk inspection, because only when you are able to understand the risk of effectively is how you are able to price for the assets that you're insuring. Now, in these times, it's very difficult for us to carry out any form of a physical risk inspection. But at the same time, the fact that you are insuring the risk requires you to come out with a solution which still meets the requirement of underwriting. And at the same time, you don't put your balance sheet to risk. So what we have done, again, over the years, the journey that we have traversed in respect of our investments in technology, we have been able to undertake virtual risk inspections. And these mechanisms have been created by which we are able to carry out this virtual inspections prior to underwriting the risks. And in the process, there is a live video streaming that happens of this inspection survey that we do. And thereby we are able to kind of underwrite the risk at the same time and ensuring that our balance sheet is not exposed to undue risks that could come and hit us in the future. So that's one example of how we are kind of managing the balance sheet risk when it comes to the core aspect of underwriting. Even on the claims side, I mean, one of the key requirements, while the extent of claims could be slightly lower in these times, but equally for the claims that come through, it's important for us to ensure that claim service continues. Now, there again, I think some of the investments that we have done is on the motor side. We can do a live video streaming of the motor assessment of claims. On the property side, I mean, there are very recent examples where there was a factory which got impacted on account of damages in these times. So we were able to deploy drones and survey the location. And in the process, we were able to kind of assess the extent of damage, which otherwise we would not have been able to do unless and until we would have invested in those capabilities. So again, we are ensuring that the customer aspect is taken care of, and equally the risk that is associated to the company is appropriately managed through technology-based interventions. So there again, it's a case of how we are able to protect our balance sheet. And so far as your other thing which you asked on growth, I think in these times we have actually seen a couple of growth opportunities getting played out. Now let me give an example of 2-3 areas how we see growth playing out for us. On the corporate side, one of the things that ICICI Lombard has done over the years is build direct relationship with corporates. And that stands as a testimony in these times when the corporates generally, as I said, would want to place an insurance with a company which is time and tested. And they just want to kind of make sure at these times not to look about for an alternate insurance partner. So, and April 1, as we all know, is a big day for corporate renewals because most of the corporates mirror their renewals to the financial year cycle. And happy to report that most of the corporates that were due for renewals on April 1, we have been able to kind of get those renewals, and that has seen reasonable level of growth momentum sustaining. The small and the mid corporates within that has been an area of focus for the last 3-4 years in particular for us. And there, I think we have significantly advocated use of digital capability through robotic assistance driven mechanism. We call it as Myra, My Robotic Assistance. And in these times, and particularly for the month of April and May, we run a campaign on the SME side. And happy to report that almost 90% of the policies that we have sold on the SME side have been able to be done through digital adoption, and the growth momentum is quite positive. So SME is looking very good for us. Quickly talking on the retail side, if you look at on motor, we all know that there is no growth happening on new vehicle sales. I mean, because most of the OEMs and dealerships are pretty much not functioning completely. While in the last week or so, we have seen some kind of relaxation happening, but at least till now, most of them were closed. So the only avenue through which most of these points of distribution are able to make margins, let's say the dealers, is to be able to continue retaining the existing customers of theirs. And a lot of emphasis of us has been to kind of promote retentions or continued renewals of the existing customers. And there we did make an acquisition in Q3 of the last financial year, which called from Unbox Technologies. And today in these times, that particular acquisition has come in very handy because we have been able to deploy the CRM platform at the points of distribution, and we have been able to significantly make the benefit of being able to retain a larger number of customers. So again, we see growth momentum sustaining on the motor side as well. And finally, on the health side, this is an event like any other catastrophic event. It's an event of a pandemic nature, which impacts the health of all of us. And as I'm sure if you would have asked this question 3 years back, let me ask to you, Vishal, would you have taken a health insurance cover maybe 3 or 5 years back?
No, actually not. I would have not taken a comprehensive one. I'd
One
have
would
just
not have
taken
taken
a.
a comprehensive cover. Or even for the matter of fact, if you would have polled a people of 1,000 people 3 years back and asked them to raise hands on how many of them would have had a health insurance cover, I would not be surprised if very few number of hands would have kind of gone up. Now that's a state of situation where we are insofar as health penetration is concerned. And events of a pandemic nature clearly impacts the health of all of us. And that by itself presents an opportunity. And today, the point that you made, while you would have taken some form of health insurance cover, but the extent of coverage would not be adequate. You look at yourself, what kind of costs we incur while going to an hospital, while we may not want to have that situation coming through. But indeed, if it does happen, the extent of money that we have to shell out is significant. So again, health clearly presents an area of opportunity for growth, and there is a clear silver lining that exists insofar as that particular segment is concerned. So in a nutshell, that is what I would say in terms of how we are protecting our balance sheet, and at the same time looking at different segments in terms of growth levers as well.
Okay, so great point again. I have two questions combined now. Uh, I think it's easy because we've covered a lot of it. There are emerging risks because of the COVID-19 situation, and there were
Yes,
existing risks.
yes,
Okay. And you've often said that risk management should be, not a compliance function, but a business function,
yes.
correct? How do you assess the situation at this point of time? Organizations have to handle emerging risks, current risks, and make sure that it's not a compliance function. Who do you go and tell in the organization that please look at it as a partner function and let's manage this risk together?
So I think let's look at it this way, right? I think, as I said, it's all about, let's say, the culture of the organization. I think it's if you have a culture which kind of ensures that every employee of the organization is sensitive about the function that he or she is handling, then they by itself understand what risks that they are exposed to. So to that extent, I would say the foremost point which I would make is with respect to what kind of a culture does the organization imbibe. And if you have a well laid down culture across the organization, then to that extent, managing risks in even in these adversities or even in these uncertain times seems to be relatively much more easier. Now let me look at a couple of risks that could be risks in the past and certain risks which we could kind of face as we get through this event. Let me talk the ones which is the latter part. I mean, some of the new age risks that we are exposed to in these times, which becomes of much more significance. Now, the point that I made was, as I said, I'm sure every organization is looking at one in these times to have most of their people working from home, which is but natural to have that situation in place. And that by itself opens up a set of risks that we are exposed to on the cybersecurity front. And we know the importance of cybersecurity. There have been instances of WannaCry, Petya, and similar kind of, I mean, we can keep taking names. And these are events which have, in that sense, put organizations to test. And therefore, in these critical times, while there is a need from a business standpoint to have your people operating from your homes, but equally at the back end, there is a need for you to have your information security team up and running. And again, in a sector in which we are, regulator mandates us two things. One, they ensures that you have an appropriate information security policy to be put in place, which acts as a governing mechanism, which is approved by the board. But more importantly, there is a designated chief information security officer who has to be an employee of the company and who will be responsible for instituting various security control measures so that the organization is in that sense protected from various vulnerabilities that we are exposed to. So to that extent, you also have a chief information security officer. And thirdly, from a governance standpoint, what we have also done between the board and the CISO, we have created an information security committee, which comprises of members of the management committee who tends to have an oversight on the various aspects of information security. So the first aspect is culture. The second aspect is governance, so that you have an appropriate governance structure through which you are able to manage this. Now coming to specifics in terms of what you can do in order to address the cyber security related risks in this environment, I think what we have done is, one, we have taken a lot of initiatives in sending a lot of mailers so far as the companies are concerned, because these days you tend to get a lot of links, you get a lot of emails saying that if you click this, you will get whatever the benefits are. So in that sense, we have done a lot of educational mailers, educational videos that have been kind of put in place so that you are able to manage the security risks that you are exposed to. That's one. The second thing, when you are equipping your employees to work from home, there is a need for you to protect the customer data as well as prevent any form of unauthorized use of the data that resides with the people. And what we have instituted again is insofar as various endpoint securities are concerned. Now, endpoint securities could be use of various USBs and similar kind of access drives is something that we have prevented for the organization at large. So while you can continue working in the hardware assets which are already kind of screened and appropriately monitored, but at least insofar as any kind of data leakage or data theft is concerned, I think there is a lot of endpoint security that has been instituted insofar as data protection is concerned. The second aspect which we have done also to ensure that we have the information security protected is a lot of phishing activities is what we carry out. I mean, we kind of send mailers saying that you will get 5 days off if you click this link. That's a classic way to test out if people get phished or not. Now, in the process, a lot of us may click, and if you further click on the further links, then automatically there's a pop-up that comes and says that you have been phished. So, and that by itself is an awareness that gets created in the minds of people. And again, there are grids in terms of actions that are being taken in case if one persists continuously on various phishing attacks that we carry out. So in the process, again, you are able to kind of manage the risk associated with cyber security.
And I also want to understand, we spoke so much about risk appetite and risk tolerance. You know, who should set the standards? Is there a case for setting standards to measure an organization's appetite and tolerance?
When you look at well-established standards, whether it is the ISO standard or whether it is, let's say, the COSO standards that prescribe requirements on companies, all of them lay emphasis on one of the most important aspects, which is tone from the top, because that sets the context or the tone for the risk appetite that is being set for the organization. So that's very, very important. And from our standpoint, again, the risk appetite is something that gets set at the board level, because the board determines basis the businesses that we are into we kind of set what kind of appetite that we want to set for ourselves as an organization. And then comes in terms of governance, we do have the risk committee of the board, which oversees our adherence to the risk appetite that has been set. And then you have, let's say, the management who kind of takes it forward insofar as compliance to the risk appetite statement that is laid out. But the most important thing is setting a tone from the top. And there again, if you look at from an ICICI Lombard perspective, one of the things, again, we are possibly the first Indian company at that point of time, way back in April 2018, when there was this ISO 31000 2018 standard that came into place, which certifies institutions on risk management practices. And what they look for is three aspects. One is the risk governance that the organization has set. Second is the risk culture that again the institution has adopted in their ERM practices. And the third is the internal processes that the organization has instituted insofar as the control and self-assessment framework is concerned. So when we got this ISO 31000 standard compliance done through British Standard Institution, we were the first Indian company at that point of time to be certified under the ISO 31000 2018 standard. Now that by itself, in that sense, give us some credence insofar as governance, culture, and our processes are concerned. And when it comes to appetite, my thought process is you should set your appetite only with 2 or 3 key matrices. You can't have an appetite statement which runs into, let's say, a full page in terms of number of appetites that you want to set for yourself as an organization. But more importantly, when you set those 2 or 3 appetite as a part of risk appetite statement, it's important to kind of merge it with the organizational objective that you have. I mean, as a company, you can have a vision on what is it that you want to be known for. Your appetite should revolve around it. So that's the foremost requirement. The second aspect when you look at an appetite is it can be either a quantitative statement or it can be a qualitative statement. There's nothing wrong in either which ways when you look at defining an appetite for the organization. But my personal preference is to have a qualitative assessment or a qualitative risk appetite laid down or a quantitative risk appetite laid down so that the ease of measurement against the appetite becomes relatively better. When it comes to tolerances, unlike where I said it will be toned from the top, insofar as tolerances are concerned, because these are aspects that impacts individual risk elements of the organization, it has to be bottoms up, because these are people who are actually running the operations, running the shop, and in the process they are kind of actually experiencing the risk that they are exposed to.
So does technology play a major role here in tracking appetite and tolerance?
Absolutely. I think when you look at the appetite is more like, I would say, a high level appetite statement that gets defined. But definitely when it comes to tolerances, there is a need for you to have a technology which can aid you to kind of, one, look at what has been the actual outcomes vis-a-vis the tolerances that have been set, and in the process give you a mechanism by which you are able to know the various triggers that can get alerted and you can swing into action. Now, a classic example, but some of the risks that I kind of outlined is, let's say, let me take a simple example of a market risk. A market risk today is the most important risk element when you look at it from the current event standpoint. And you need to have a trigger which tells you, like, because of the market fall of whatever percentage, what has been the impact on your portfolio. Now, that impact on your portfolio impacts your solvency or impacts your capital adequacy. Now, do you have enough capital to be able to meet the fall in stock prices? One such examples of how you can kind of monitor your tolerances. Similarly, when it comes to operational risk, I think one of the risks that maybe I did not speak at length is fraud. I mean, in these uncertain times, there is a lot of tendency for people to do frauds. I mean, if you go back to 2008 times or whenever you have seen any crises playing out, because people are stressed, companies are stressed for their profits, individuals are stressed because of their income levels are relatively lower, there is a tendency on people to commit some form of a fraud or the other. So hence, you need to make sure that your fraud tolerances should kind of trigger immediate alerts so that you can immediately swing into action and you are able to course correct the need of the hour.
The economy. Firstly, do you see a silver lining? Okay. And how will it bounce back? There have been questions from the audience saying limping back or normalcy or bouncing back, right? I would rather have bouncing back because we're all working and we all want to have good lives. What are your thoughts on the economy? Let's talk about the macros at this point of time. How will this
Absolutely.
come? How will this country come back? Along with it, all those companies that offer those great jobs.
From a macro standpoint, if you look at non-life insurance, this was a sector that was opened up to private participation in 2001. If you look at over the last 20 years, the sector has grown at a compounded rate of 17%, which is almost 2.5 times the growth in GDP of the country. And even growing at 17% levels, hardly you will see industries growing at 17% CAGR over a 20-year period. But despite that, if you look at one of the measures of monitoring is insurance penetration as a percentage of GDP. If you look at the Indian market, it's at 0.97%. If you look at global average, it's 2.8%. If you look at the BRIC countries, they all range, particularly when you look at Brazil, when you look at China, when you look at South Africa, they are all having penetrations which are in excess of between 1.5% to 2% levels. India stands at 0.97%. So that by itself is a huge potential insofar as the macro numbers are concerned. Now, when you come to specifics, let's talk three key product lines where one sees a silver lining. Let's take motor. If you see, motor is by far the largest product line for the market. 40% of the industry plus is motor insurance. Of the 24 crores vehicles that are plying on the road, more than 50% of their vehicles do not have an insurance. That's the reality of the situation, right? While there have been some regulatory changes that have happened in the last 1.5 years, but more than 50% of the vehicles today is without an insurance. Now, currently, again, as I said, we can speak about new vehicle sales not being there. We have to focus on renewals, but the long-term prospect of the ability to convert some of this non-penetrated or under-penetrated segment into the ambit of insurance is a huge opportunity. Let me ask you, Vishal, any guesses on what proportion of the population has got a health insurance cover?
Say 2%.
So let's say 2%. So that could be more on the individual side. Now, when you look at health insurance, it's a cover that an individual takes for self or family. It could be a cover that an employer takes as a coverage for their employees, or it could be a government that can sponsor a mass health program for the vulnerable section of the society. Today, if you look at what you said is absolutely right. In an individual context, that penetration is actually 3%.
Okay.
But when you see your bang on, you're almost there. But when you look at the larger picture, in terms of all of these three segments put together, that number roughly stands at about 1/3. Only 1/3 of the country is in some form of an insurance or the other. So there is a huge headroom available in terms of the opportunity on the health insurance space. And by the way, when you talk about health insurance today, you are only talking of hospitalization insurance. Our out-of-pocket spends, which is what we end up spending for visiting a doctor, visiting a diagnostic center, ordering medicines through a pharmacy chain, availing of an ambulance service, asking for a second opinion. Now, all of these services is today not covered through insurance at all, and it roughly constitutes 2/3 of our healthcare spends. And that's not covered through insurance today at all. That's an opportunity. And that's where, again, ICICI Lombard is significantly looking at tapping into the OPD segment. So that's an opportunity there. Take the corporate space, particularly SME. And when I say these are small corporates, which also have to insure their assets and insure their people. Very few number of corporates insure their people, and a limited extent of coverage is what even they take insurance for their assets as well. So on the SME side, again, there is a significant prospect insofar as growth is concerned. So in these times of, in that sense, a possible gloom and doom in the short term, I think from our standpoint, from an ICICI Lombard standpoint, we are very, very optimistic. While there can be some temporary pain as we speak, let's say for FY 2021, but insofar as the long-term potential of the segment and the sector is concerned, it's quite enormous. And there is also a study that has been done by some of the global reinsurers, which says if the country is at a per capita level of $1,500 to $2,000, which is where we are at this point of time, the growth of the insurance sector will continue to be 2 to 2.5 times the GDP of the country.
So you would be saying that it is going to be bouncing back and not limping back.
My take on this will be, as I said, till the time we are subject to these levels of lockdown, there will always be an apprehension on people to get back to roads, get back to buying an asset. So you will see some kind of a temporary challenges insofar as growth is concerned. But there, what is more important is, again, the organizational capability to be having a multi-product, multi-channel, multi-customer that will help them to at least tide over these difficult times. And so once things comes back to reasonable normalcy, there is no reason why you should not see growth momentum kind of coming back. Now the question is whether it will come back in H2 of the current year, whether it takes maybe more than a year to come back. But I think we will have to wait for the jury to be played out. But at least from our standpoint, we are extremely excited and positive insofar as the growth momentum returning back to normalcy.
Okay, great answer. On a personal note, how are you spending time with family? How are you spending time for yourself? What are you doing?
So that's always a difficult one, right? In these times when you are at home, never exposed to this kind of a situation, you always want to kind of go out, maybe reach out to people, talk to them, is something that you would always want that happening. But I think what I've tried to do is, I think largely I'm a family person. And therefore, to that extent, I like to spend time, of course, with all my members of the family, but more importantly, my son. He's 11 years. So he's trying to learn a lot of things, trying to experiment with a lot of stuff being at home. I have hardly been able to get so much time to spend time with. Otherwise, normally I would see him only in the night and maybe early in the morning. So in that extent, yes, I spend a lot of time with my family. And the second thing is, I think I try to also do my daily routine exercises. I spend at least about 30 minutes because it's extremely important to keep your body and mind flexible. Again, in these times, so you have to be so that your mind tends to work sharply. So do those routine exercises every day. And thirdly, try to do a little bit on the sporting side as well. While at this times one is not able to do that, but they generally like playing badminton. And more importantly, I like also listening to music. So that's how I kind of stay engaged.
Gopal, you've been a wonderful guest, and I'd love to host you again. Thanks for being on Future Focus. Thank you, ICICI Lombard.
Thank you, Vishal. It was a great thing talking to you. And the only message that I want to leave for everyone, including you, is in these times, please do stay safe, stay healthy. That's very, very important for all of us to come out of the situation. Thank you.
Thank you, everybody. We look forward to having you on another episode of Future Focus very soon. Bye, Gopal.
Thanks, Vishal.